It is almost 1 p.m. here in Sydney, 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Stroud-Watts. Your top stories. A Bloomberg scoop: China considers having local governments buy millions of unsold homes in an ambitious attempt to salvage the debt-ridden property market. And Asian stocks are extending a 2-year high ahead of the US CPI print, even as Fed Chair Jay Powell repeats the higher for longer mantra.
And I'm Avril Hong in Singapore as the country's new Prime Minister prepares to take power. We'll look at the unprecedented challenges facing Lawrence Wong.
Take a look at how we're faring when it comes to Asian markets. We are seeing regional equities just extending that 2-year high, going into, of course, CPI data in the US, which could, in fact, continue to paint this picture of stickier inflation. We had the producer prices that really kind of shaped that side of expectations. And even with Jay Powell really bringing home that higher for longer narrative, we are seeing pretty decent sentiment here. Big tech rally in the US, of course, leading some of those similar stocks higher in the region here in Asia as well. It is a little bit of a sort of holiday thin session. Hong Kong as well as Korea closed for the Buddha's birthday public holiday, but the markets are online. We're seeing pretty decent gains when it comes to Japan as well as here in Australia. But take a look at one of the big stories that just crossed the Bloomberg over the last hour or so, really spotlight on China property. And this is starting to see play through when it comes to these key assets like dollar China at the moment, as well as the Aussie dollar, watching iron ore very keenly. This proposal that Beijing is said to be considering to have local governments across the country buy up millions of unsold homes. This is according to people familiar with the matter. This is really just such a huge, ambitious and a lot of question marks over this if it does come through in terms of the effectiveness of such a policy. Let's bring our Chief North Asia correspondent, Stephen Engel, as well as our China economy editor, James Major there. And Steve, let me start off with you. And obviously you've been, let's get to you, James. James, we've all been sort of covering the highs and lows, and now really most of the lows when it comes to China's property market struggles. What do we know about this plan, and I guess the idea of whether it fixes the structural problems with this sector?
I think at the moment we know very little about how this is actually going to work and how far or how widespread this is going to be across the country if it is actually rolled out. What we're reporting is that the government is asking several provinces and some government entities across the country, if they could assist or they could participate in this this planned scheme to basically take a bunch of millions of unsold homes across the country, buy them from developers who are struggling, and then turn those into low-cost housing for people. There are a lot of questions about how this would work. The Politburo kind of hinted at this in their meeting in April, where they said measures should be taken to deal with the housing stockpile. And so it seems like there is some movement going towards this, and obviously the Politburo is sort of speaking on this. It's an indication that something is going to happen on this question. But the real issue is, does this really solve all the problems that the housing market is facing? This will help some property developers get rid of their excess inventory, but if they have to take steep discounts when they sell these to the government, they may not actually help their financial positions too much. And then another problem that could be created by this is that if the government is suddenly in the business of providing cheap homes, then that may well dampen people's interest in purchasing homes. So if you can rent a home cheaply from the government, like you can in places like Singapore, which is people have often spoken about as a future model for the Chinese housing market, then why would you go out and buy a home when you can get one cheaply from the government? So that this kind of plan, if it's rolled out extensively across the country and in many provinces, could actually dampen demand for home purchasing, which would then also damage housing developers who are looking to build and sell homes. So there are lots of questions about how this would work. Who's going to pay for this? How does the state banks have to take these provide money cheaply to the government to purchase all this? But if it does happen, and it does happen across the country, it's going to be a massive change in the housing sector, which is a huge portion of China's economy.
Yeah, James, this is certainly an intriguing proposition if this is in fact something that is, seriously being considered. I do wonder, does it remove a kind of the confidence trap that we've seen households and corporations really stuck in for China, even as market sentiment improves?
Yeah, I think for households, there's lots of different. I think you have to think about the different kinds of households. For households that already own property, if this leads to property prices continuing to fall because there's less demand for purchasing homes, there's less demand on the secondary market for purchasing homes, then I don't think this is going to help the confidence of existing home buyers, because the value of their asset is continuing to drop. You're still seeing housing prices on the primary, on the new houses, and also on second-hand homes falling. Vast majority, well, not the vast majority, but the majority of home sales now in China are secondary home sales. So this is homes that are not new but have been purchased and lived in by someone, and then have been sold. And if the government is now going to get into the business of providing low-cost homes, as I was saying, this may well dampen demand for those kind of homes. So if you're a homeowner, you've got 2 or 3 properties, and you want to sell one of those, prices are continuing to fall. I don't think this kind of plan is going to help those confidence. It may help confidence in the home building sector if home builders can now have a guarantee that they can sell these properties that they built to someone. There are lots of unsold, especially in the poorer and the less developed provinces of China. There are lots of houses that have been built and that no one is buying. So if property developers can get those off their books, maybe that helps them, improve their balance sheets. But this may solve part of the problem in the housing market. It may make other parts of it worse. So we're going to have to see how this works out. Is it going to be nationwide? Is it just going to be in the poorer provinces? Those are the kind of questions I think that are really, really important, and how this will work and how this is going to matter for the economy.
Bloomberg's James Maker there. A lot of question marks over what we know so far, but let's get some reaction when it comes to the investors' view. Eddie Lowe is the CIO of Maybank Group Wealth Management and joins us now. Eddie, great to have you with us. I wanted to get your thoughts straight away on this report and the implications. Do you think this is a sort of big bang measure that the markets have been waiting for?
Well, I think it's an encouraging sign following the vows to adopt more flexible measures to really clear the housing inventory from the government. If you look at the Chinese property sector, the policymakers have been trying to implement measures, removing housing curbs, providing support to distressed developers. But the sector is, the recovery has been actually very slow. So I think this move, in some ways, can at least help to clear the inventory that has been lying around. I think the question, obviously, is who is going to fund it. If they are just going to ask the local government or the state banks to fund it, maybe these guys may not be willing to do so. So I suspect we do need some central bank funding, directly or indirectly, to fund this initiative.
How much of, I guess, a percentage of the uncertainty over the Chinese economy would a policy like this remove? And does it sort of significantly increase your willingness to invest in this market?
Well, I think at the beginning of the year, we actually have a constructive stance on Chinese equities, because we thought that a lot of the negatives has been more than priced in the valuation. And we did see an improvement in sentiment over the past 3 months. Obviously, that expectations of more pro-growth policy stance is helping the markets. So the property sector is definitely one of them. We are not expecting a V-shaped recovery in the property sector, but some form of stability could really help to prop up consumer confidence and therefore supporting a domestic demand over time. Right, but at the same time, we are also watching very closely on other aspects of the government policy developments. I think this includes on the monetary front, on the fiscal front, where we are talking about introducing new trading programs or subsidy programs to promote more, buying of big items such as auto. And also, I think, developments on the private sector side, where they talk about drafting of private sector laws to protect the interests of entrepreneurs, to encourage really, or to bolster or to revive this animal spirit in the private sector. I think these are the critical components probably need to be in place to really sustain a meaningful recovery in the economy as well as markets.
Could those nascent animal spirits be dampened before they've even had a chance to be revived by these Biden tariffs and the threat of retaliation from China?
Yes, we do expect to see, some form of escalation between U.S.-China tensions, especially in the run-up to the U.S. elections later this year, and tariffs is probably one of them. But if you look at the tariffs right now they're talking about, I think it's probably targeted at specific sectors such as EV, solar panels. So these sectors probably will see some volatility in the related share price performance. But we do also have other sectors that are more insulated from these tariff discussions or debates. This includes a lot of these high dividend paying state-owned enterprises in the telco space, for example. And also, I think in the consumer space, a lot of these new economy, internet plays, I think these are also somewhat insulated from these tariff discussions.
Eddie, when it comes to the fortunes of China, how correlated is this market to the rest of EM in Asia? Have you seen really the dollar, and we'll get to the Fed a little bit later on, play a bigger role in that relationship?
Well, we do actually see over time there is an increasing I would say, connectivity between China and the different parts of Asia, including ASEAN economies. So I think the fortunes of China, or the fortunes of these ASEAN economies is somewhat also linked to China. If China does better, obviously the likes of Thailand, especially, or even Singapore would do better as well. So to a certain extent, I think US dollar does play a part. We can talk a little bit more about that. But I think an improving China should actually bode well for the region as a whole.
Eddie, you're staying on with us. Eddie Loh, CIO of Maybank Group Wealth Management. We'll have a little bit more discussion when it comes to expectations from the Fed and that key CPI print. But coming up, we have our big take on Indian Prime Minister Narendra Modi. We take a look at his journey to becoming one of the world's most popular and polarising leaders. That's just ahead. Plus, analysis on Singapore's leadership transition with Bao Group Asia, the challenges facing the city's new leader, Lawrence Wong. This is Bloomberg.
I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work.
Fed Chair Jay Powell, they're citing the lack of progress being made in inflation. Really the same story that we've been hearing from the Fed over the past few weeks and months, which is that further evidence will need to be seen that we are seeing really that significant return to lower inflation. Of course, we are waiting the US consumer inflation print. That key print later on Wednesday will give us clues to what the Fed's next steps will be. This after, of course, the producer price data came in stronger than expected. US stocks are largely kind of shrugged off these signals that rates will be higher for longer, and we're seeing kind of futures not showing too much of a change in the Asian session. We're seeing a nice pop with Asian equities, though, extending those gains from that two-year high. That US April CPI report, economists surveyed by Bloomberg, these are the expectations. Expectations are that the headline and core measure will moderate. Some hope of easing price pressures are being offered up by that preview there. Let's bring back Eddie Loh, who's the CIO of Maybank Group Wealth Management, still with us. And Eddie, you think that the Fed will only cut by 50 basis points this year, and that will come in September?
Yes, indeed, because when we look at the US CPI data, it has actually come in above expectations for the past 3 months consistently. So we thought that because of that, or to quote Powell, the lack of progress in inflation, we think that the Fed will actually delay the first rate cut sometime in September, if not November, and the extent of rate cuts as well. So initially, we have penciled in the first rate cut to be in July with a 100 basis point rate cut for the whole year. Now we are expecting only 50 basis point rate cut.
To that effect, then, how do you expect the trajectory over the next few months to play out when it comes to trading in US equities?
Right, I think if you look at the markets, obviously April there was a bit of a scare, and that caused the markets to sell off, coupled with some renewed geopolitical tensions. But I think what is key here is that Powell, while he acknowledged that the central bank the Fed needs some more evidence before really embarking on a rate cut, he did say that the next move will unlikely be a rate hike. So I think that is important. As long as he keeps reiterating that point to say that rate hike is highly unlikely, I think the market will take comfort. And then, as long as corporate earnings continue to grow, I think that will be supportive of risk assets.
And Eddie, at the moment, we're seeing some big news when it comes to copper futures hitting that record in New York. It really is the shorts phasing this squeeze. And honestly, this has kind of been building for months, right, with the copper price being on a tear, these concerns about supply and demand being out of sync. Across commodities, where do you see opportunities? Because I know for gold, for example, you're more interested in going through the miners as opposed to the commodity and the metal itself.
Right, indeed. We have been tracking gold for quite a fair bit. We always thought that gold plays a strategic part in one's allocation because of the hedging benefits. And obviously, the central bank purchases have been supporting the prices. But given the run-up in prices, year-to-date, gold has been up by more than 10%, right? We thought that it's vulnerable to some pullback. In contrast, the gold miners, which obviously will benefit from higher gold prices, they have really not run up as much. And we thought that from a risk-reward perspective, the gold mining companies could look more interesting than gold price.
Eddie, really great to have you with us. Eddie Loh, CIO of Maybank Group Wealth Management. Stella had our interview with Malaysian Prime Minister Anwar Ibrahim at the Qatar Economic Forum. Hear why he sees no urgency in reducing fuel subsidies. That's next. This is Bloomberg. Malaysia's Prime Minister has signalled that he sees no urgency in reducing fuel subsidies. It's a reform that's been closely watched by investors. Anwar Ibrahim spoke to us at the Qatar Economic Forum and also confirmed his government will not consider approving another casino.
There's no necessity for Malaysia to venture into casino business. We are focusing on digital transformation, energy transition, AI, and we believe that this is adequate to push the country forward. Now, the complication with the casino was that nobody actually referred to us to check the facts and the veracity of the information. And number two, it complicates because the king's name was somewhat implicated or insinuated. And in our system, although it's a constitutional monarchy, the person monarchy highly respected and regarded. And it's grossly unfair, not only for you, but then abused by some other members of the opposition to see that the Prime Minister and the King is in cohort trying to open up a new casino. And that was why I took a very strong position, because it is, again, manifestly unjust to drag the name of the King, because the King is not a politician. They are not at liberty to respond. And the system of the royal members is that the paraphernalia must be respected, how we address them, and the fact that they are accorded with dignity and respect. That was why I took that, but nobody was arrested or the media was banned. They were just in the process asking questions, and I think we move on.
We move on, just to be sure to put it out there, no casino under your administration. Let's talk about the economy. Almost 2 years on, is the Malaysian economy where you thought it would be? Because when you speak to some investors, they say, you know, they've been pretty frustrated because of the slow rollout in your reforms. They point perhaps to the slowness, the delay in cutting fuel subsidies, which would add to the coffers, improve your fiscal position. Your response to that?
Well, we have undertaken these stringent measures. I've inherited a system where we have 1.5 trillion deficit for 5.6. And of course, I have to deal with this. Now, an abrupt, radical change would result in a lot of frustrations and anger. We have seen the so-called reform agenda in many of the countries in Europe. It's a disaster. You assume that the elites have all the answers without even interacting with the masses. And I think this is the flaw, basic flaw of the so-called elitist democratic ideals. Now, what we have done is, firstly, the issue of transparency, the issue of strong call for anti-corruption measures. All procurements must be through proper, transparent tender exercise, which did not happen. That's why corruption became endemic, and we lost billions in the process. But have we not taken measures? No, we did. The fact, Haslinda, that we focus on proper tender process, that saved billions. And this is a major shift from the old corrupt policies. Secondly, we have undertaken, for example, electricity. The cutting of subsidy for electricity to the rich, to industries, but not affecting the 85% of the population. I don't think we should burden the issue of the governance is to make sure that it is transparent, it is just, but it should not punish the poor. Did we do it? Yes. How much did we gain? 4 billion ringgit. Now, we subsidize even for chicken. We withdrew the subsidy. How much did we save? 1 billion. Give us a break, Haslinda. Don't force us to make all these measures in 1 year.
So when it comes to the cut in fuel subsidies, can we expect that in June? Some say perhaps by year-end. Can you give a time frame?
We acknowledge diesel and oil. Our prices is the cheapest. I mean, Malaysian price is cheaper than even Saudi Arabia. So I concede, things need to be done. But it has to be done judiciously, because in no way will I punish the masses. You see, inflation can be a problem. What can be the priority? The priority is to stop the wastage and the leakages.
Malaysian Prime Minister Anwar Ibrahim there speaking with Bloomberg's Haslinda Amin. All right, take a look at what we're tracking. A couple of key sectors here, China chips being one of them. Of course, we're still processing the implications of these, in a lot of ways, very nuanced tariffs that we've heard from the Biden administration. Of course, there are a lot of key exclusions as part of that. But we're also watching perhaps more closely the China property sector with the news coming across the Bloomberg that potentially there is a consideration for feedback in terms of this plan for the government to buy back unsold homes to ease this ongoing property glut. More ahead, this is Bloomberg. Take a look at how we're tracking when it comes to Asian equities, really extending these two-year highs ahead of the US inflation report. But of course, specifically, we're seeing Chinese equities, also some assets here in Australia reacting to this report that China is considering a proposal to have local governments across the country buy up millions of unsold homes. People familiar with the matter speaking to Bloomberg saying really this would be one of the biggest attempts yet to salvage the property market, which has just been downtrodden for so long. Beijing, according to these reports, seeking feedback on a preliminary proposal as, of course, the property sector continues to be the biggest drag on the economy, even as we've seen Chinese equities really bottoming out and seeing some improvement in sentiment. We're hearing that the State Council is soliciting feedback from several provinces and government entities on the plan. They have, of course, experimented with pilot programs to clear excess housing inventory. None of them were sort of terribly successful or noteworthy under state funding rules, of course. course, but this plan that's being discussed, we hear, is much, much larger in scale. So we are seeing that reaction across, obviously, the property sector and property stocks, developers. The Shanghai Property Index up by 2.5%, the CSI 300 Real Estate Index up by over 5%. Seeing a bit of a reaction when it comes to dollar China as well. The Aussie dollar, of course, really the proxy for all things China eco-related, seeing a pop of about 66.48 is where we're trading at the moment. Also watching, of course, iron ore, another way that we see these China property and broader eco narratives expressed. Let's get some more analysis on that big scoop today. We're joined by Haslinda Amin, who's the head of East Asia Corporates at CreditSights. And Haslinda, first of all, does the reports of this plan, does it surprise you at all? What do you make of it?
It was not that surprising. As you mentioned, there has been many Tier 1 and Tier 2 cities rolling out this type of purchase in the existing inventories by the local government. But I would say a top-down message from the central government is still slightly surprising and on the positive side. But I think a lot of the details are still missing at the moment. So I think we will wait for the timeline in terms of the funding channels as well.
And in fact, our sources in this Bloomberg script saying that officials are still debating the feasibility, the details of the plan. We don't know much about either. For you, what would make this feasible and what would make it successful compared to the smaller scale pilot programs that we've seen?
I think first of all, this is a quite good direction that the central government is really realizing that doing the city level demand side support policy is not enough to boost the primary home transactions or the home prices. And in order to bring the animal spirit of the home buyers back to the market, you really need to digest the inventory. So I think at this moment, if we look at the scale is a really big issue here. Last year, there was a 1 trillion RMB of a special central government bond issuance, and now followed by another 1 trillion. 2 trillion as a number-wise is not small, but if you compare it with the existing money needed to digest the inventory, it's at a scale of 5 to 10 trillion. So we will need to see how many additional special central government bond issuance the government is going to roll out. And I think the second issue is about the timeline and how long it will take the local government as well as the state-owned banks to support such initiative. I think for the banks, they're a little bit reluctant because they're already purchasing a large amount of the central government special purpose bonds. And when the interest rate goes up, there's definitely going to be mark-to-market losses for them. So how much more willingness the banks are going to do the national service, I think it's a bit questionable.
Removing or digesting the existing stockpile is one half of the equation, right? Does that necessarily lead to a boost in demand? Because that's the animal spirits part that you're talking about.
Yeah, I think we need to see the home prices to rebound first. As of now, I think first-tier cities, some of the core districts, the home price is still holding up or at least stabilizing. But if it goes down to second-tier and even lower-tier cities, we are not seeing a visible rebound of the home prices yet. So in order to bring the home purchase demand back, I think we definitely need to see a rebound of the home price first. And then the digestion of inventory, this is a very long process. I think we need a lot more funding from not just the central government, but also from the state-owned banks, as well as perhaps some of the asset management companies within the system.
Does it seem unlikely that you'll see a rebound in home prices if one assumes that these sales to local governments will have to be done at a discount?
I think it will take some time because we're talking about the home inventory at a historical high, almost close back to 2016 level. And once the government initiate this home purchase program, it will take at least another 6 to 1 year, if not even longer, to get the program kick-started. So I think it will be very long process and it will take very long time for the home price to rebound. At the same time, the income growth is slowing down in China, and the people's propensity to spend is not very high. So I think we need to see a concurrent rebound of the overall macro conditions, business sentiment, and consumer sentiment together with the home prices to bring the overall home demand back.
Does this necessarily favour the state-linked developers, and does this not really solve much of the pressure on high-yield private developers?
I think from a credit standpoint of view, I don't see that much of a positive catalyst coming from all these policies. I think most of this money will not be additional funding for the developers, even for the state-owned ones. If you look at the contracted sales year to date, even the state-owned developers are facing a 30-40% year-on-year contraction of their contracted sales. And if you look at the restructuring terms recent came out from Fantasia and additional default from high-yield developers, it feels like the liquidity and funding condition of the sector have not really significantly improved over the past 6 months, despite all the demand side and supply side support measures. So our house view is still quite cautious towards high-yield Chinese developers, and some of the investment-grade developers, perhaps I would see a marginal improvement in terms of funding condition over the next 6 months, but over the medium to long term, in order for them to be financially self-supporting, you still need to see a very visible rebound of contracted sales.
Credit Side's head of East Asia Corporate, Haslinda Zhang. Always great to have you with us, Haslinda. Let's take a look at some of the other top global headlines that we're following. The Kremlin says Russian President Vladimir Putin will discuss issues of strategic cooperation with China's Xi Jinping during a 2-day visit beginning on Thursday. This is Putin's first foreign trip since his re-election. He'll also meet with the Chinese Premier Li Qiang for trade and economic talks. The US has threatened further sanctions on China, which it accuses of providing support for Russia's war effort in Ukraine. A group of US TikTok creators have filed their own lawsuit to block the law that would force ByteDance to sell the popular video out by January or face a ban. The 8 complainants include a Texas rancher, a seller of skincare products, and a book lover who promotes black authors. Their lawyers say that the creators see the US law as an attack on the free speech of some 170 million Americans who use TikTok. We are coming to the end of an era in Singapore as Prime Minister Lee Hsien Loong prepares to step down after 2 decades. He's handing power to 51-year-old Lawrence Wong, who's set to face a growing list of economic and geopolitical challenges. Bloomberg's Avril Hong is in Singapore with more. Avril.
Yeah, this is a rare transition of power in Singapore, and the successor is someone who earned praise for his leadership during the pandemic, but he's not quite been tested on the foreign policy front just yet, and this is amid geopolitical uncertainties, and we're seeing the US-China relation really the elephant in the room. So let's bring in to discuss the future of Singapore's foreign policy, Nydia Niao, MD of Bauer Group Asia. Nydia, first off, we've seen Singapore very skillfully navigating its relations between the US and China. But this is also an evolving landscape. I mean, we're just hearing about these tariffs from Biden, China pledging resolute measures. Strategic competition that's only going to deepen, especially in an election year for the US. What is this going to mean for Singapore? What is this going to mean for Lawrence Wong?
I think Lawrence Wong is definitely going to have a lot cut out for him in his first year. I think, he has already done a lot of homework in terms of preparing for to deal with these relationships as he comes on board. I think he's already talked about how he will maintain a very principled approach when it comes to dealing with foreign affairs and foreign policy. He's not pro-US, he's not pro-China, he's very much pro-Singapore. And what that means is really taking a consistent, principled approach, following rules-based international order. And I think that will be really what will be guiding him in the first couple of months, especially.
So how soon do you think we can see him kind of stamp his own brand on foreign policy then?
I think it will take some time. I think ideally he'd want to settle into his new role, get a bit more comfortable before, bringing in some of his own brand into it. That being said, he is the first prime minister who is educated in the US, so he is very familiar with the US and how they operate. He's been able to bond with American companies and American congressmen when they come through. So I think that will help in terms of building his relationships on the US side going forward. That being said, he's also brushing up on his Mandarin, taking lessons. And, I think Singapore has always been very adept at balancing visits with the US with visits with China. So for instance, he went to the US in October last year to launch the dialogue on critical and emerging technologies. And then he subsequently followed that up with chairing the JCBC in China in December.
Right.
So I think we'll continue to see more of that, especially with stable hands, that given the minimal changes in cabinet as well.
Right, I think his FaceTime is a key part of these bilateral relations. But the thing is, it's not just about the US and China. It's also about what we're seeing regionally, especially as Singapore continues punching above its weight. I mean, you think about how concert subsidies to bring Taylor Swift into town just ruffled feathers among neighbors. This all has to be handled delicately. Is this message of continuity going to cut it?
I think the interesting thing is that with the region, you are also seeing a bunch of leadership transitions throughout. You see Indonesia having its own new leader coming in October, and the other leaders have only just barely entered the leaderships of their respective countries. So I think, as leaders, the region is just going to have to develop and find its own rhythm. And in this case, I think it's best not to stir the boat. So that would be where continuity would help in that sense, in terms of just being able to help provide, steady pair of hands and not do anything unsurprising that might take people, catch people off guard.
Okay, to your point about how he's talking about it being pro-Singapore, not pro-America or pro-China, what exactly would that entail though?
I think it's very much looking at what's in Singapore's best interest. I think, like you've mentioned, we've always punched above our weight in terms of being in the international scene. I think definitely that would entail focusing very much on Singapore's growth, what would benefit Singapore in that sense. We definitely want to continue to have a very facilitative investment environment that would encourage American and Chinese businesses, as well as really businesses from all over to continue investing in Singapore.
On that note, though, that reshoring trend is likely to continue, regardless of who wins the US election. How is that going to perhaps make it a bit trickier for Singapore to attract US foreign direct investment?
I think that Asia is still going to be very much a region of interest for American companies. And so, with that being said, Singapore remains an important hub and has been a very open and friendly hub for American investors to come in. And there is also definitely, I think, a lot of options for them to consider other markets, but that doesn't necessarily rule Singapore out of the picture as well.
Okay, what about its cultural ties with China? How do you think that's going to be balanced going forward?
I think with regards to Singapore's cultural ties, I think, that's also why DPM Lawrence Wong has also come out to actually distinguish, that we are not pro-China, but we are pro-Singapore. And I think that very much speaks to how even though we do share certain commonalities in terms of background and we do have a Chinese majority, I think that it is important to recognize that Singapore has really carved out its own space, and that will definitely continue going forward.
It's been doing a good job with this fine balancing act. Let's hope that continues. Nydia, we have to leave it there for today. Thank you so much for coming on and sharing your insights with us. Speaking there with Nydia Niao, MD of Bauer Group Asia. Heidi?
Bloomberg's Avril Hong there in Singapore talking about the leadership transition there for Singapore. And just a reminder that you can now sign up for our Singapore edition newsletter for insights into one of Asia's most dynamic economies, delivered every week. Find it at Bloomberg.com. This is Bloomberg. Let's check in on Indian markets as we wait for, of course, trade numbers are in focus today, as well as the Go-Digit IPO. Just some of the considerations for investors. We're seeing the Sensex really treading water at this point. This, of course, as we continue to mull the implications of what the election results might be. But let's take a look at some of the other headlines that are stories that are making headlines, I should say, in India. Finance Minister Nirmala Sitharaman says that key reforms are needed to sustain foreign inflows once India is added to global bond indexes. She says the inclusion of Indian bonds to JP Morgan's EM debt index starting in June could bring inflows of at least $20 billion. Sitharaman also says that a new Modi government will undertake over 100 fresh policy reforms in its first 100 days. Well, India's second largest wireless operator, Bharti Airtel, missed profit expectations for the fourth straight quarter due to a one-time charge. The results reflect continued pain from last year's currency devaluation in Nigeria, its biggest market in Africa. Bharti's first quarter net income fell 31% from a year ago. Well, Prime Minister Narendra Modi has filed his nomination papers to contest elections from Varanasi. The city is steeped in religious significance for the country's Hindu majority. Modi has used a mix of religious sentiment and economic measures to boost his appeal among voters. He's contested the Varanasi constituency over the past two elections and won comfortably. Well, Bloomberg Originals has been looking into Modi's rise to the top of Indian politics. Take a look at a preview from that report.
Who is Narendra Modi? Well, it depends on who you ask.
India's Prime Minister makes the impossible possible.
He is very conscious of his image in history.
He has completely seduced the Hindu belt.
Some view him as the most effective Prime Minister in the history of India. He's passionately worshipped by millions and hailed as one of the world's most popular leaders, with approval ratings surpassing 70%.
Democracy delivers, and democracy empowers.
On the other hand, critics see him as an autocratic Hindu nationalist who marginalizes minorities and undermines democratic norms.
The idea that India is a democracy, this is a lie.
And while on Modi's legacy, let's bring our government reporter, Sudhir Ranshan Sen, who joins us out of New Delhi. And of course, out of all the years in terms of the significance for global investors to understand India with the slowdown of China and the rush into Indian assets, it feels like we're at a point where there is this need to kind of analyse this leader and what drives him, right? What are the core beliefs that you speak of in this story?
Well, I mean, you know, it's quite a. If you look at Prime Minister Modi, it's a study in contrast in some ways, because at one level he's reached out and kind of had schemes and measures that has pulled out millions out of poverty. At the same point of time, he's very, very close with billionaires, to the extent that we have seen the opposition kind of criticizing him, and it's one of the main criticisms that the opposition has come out even as the elections are going on. We see that as a common refrain in India. So that is one part of it. And the other part of it, the contrast is that the Prime Minister, is because the fact that he comes from the RSS, the Rashtriya Swayamsevak Sangh, a Hindu-first organization in India. He is pushing a Hindu-first agenda. At the same point of time, he is courting capital from across the world. So there are these questions, therefore, that come up about the inclusivity, in India, where that is headed. Is that under threat? We've seen reports coming out of the United States, several organizations talking about how India is dropping in the democracy indices, the freedom of press indices, which are worrying. At the same point of time, we see increasingly capital courting India. That, of course, is a fallout largely, or in many ways, a fallout of the tussle that we see between the United States and China.
To what extent do you look at the criticism that perhaps he's too focused on the idea of his legacy? There's sort of a whole section talks about perhaps his belief that he's been divinely selected for this position.
Well, that is something that, you know, we've heard the Prime Minister talk about himself, and therefore we don't have to, you know, guess that. You know, he's kind of recently said that, you know, when he was inaugurating the Ram Temple, which was being, built at a site where a mosque was there for 500 years and demolished in 1992, that marks the growth of the Hindu right in India. So he's kind of said that, you know, what we are doing today is going to be remembered 1,000 years from now. In other references also, we have seen that, you know, the Prime Minister talking about this entire issue, and that he's been kind of blessed. He is that divine, so to say, blessing to do this. So, I mean, for a world leader, these are very, very, interesting, but at the same point of time, contrasting images that we get.
You've been covering Indian politics, you've been covering Narendra Modi for such a long time, and I do wonder, you know, in this deep dive investigation, what was most surprising to you, and what do you think that really tells us in terms of policy positions going forward?
Well, policy positions going forward, more or less, if you look at the economy policy position, it's very, very clear. And with the bond inclusion coming in, we can expect a tightening of government finances to come in the next 100 days if the government is re-elected and Prime Minister, takes oath for the third time. That said, that the economic front is more or less secure. But what apprehensions we hear from the ground, or the opposition and the critics talk about, is what happens to the inclusive, pluralistic nature of India. That is where questions are being raised.
A government reporter, Sidhu Ranjan Sen there in New Delhi. And you can get more on why Prime Minister Narendra Modi is so highly popular as well as so deeply polarising. You can read more from that story, Bloomberg's Big Take, and watch that Bloomberg Originals documentary. Our Big Take Asia podcast also launches today on iHeartRadio, Apple Podcasts and Spotify. New episodes will be dropping every Wednesday, and that first one will be focused on the rise of Narendra Modi. You can track the latest developments on India's ongoing general election on the Bloomberg terminal and TV2. This is Bloomberg. Take a look at how we're setting up ahead of that key US CPI print, and it does look like global stocks are set to reach new highs before that print comes through. A fresh record in sight, the big tech-led rally carrying through when it comes to the Asian session as well. When it comes to treasuries, we're seeing traders across the options market positioning for a bond rally and a sharp drop in yields after that inflation print. This is Bloomberg.